So what's going on, guys? In today's video, I'm going to run you through how the 4-year Bitcoin cycles work, how to prepare for them, and what to expect. So every 4 years, a halving occurs in which the miners receive half the rewards. Halvings reduce the rate at which new coins are created and lowers the available amount of new supply. In order to create a Bitcoin, it needs to go through a process called mining, which is done by special computers or mining rigs. I know a few people in the past that did have their own mining rig, was mining Bitcoin, but it's just not very profitable now for the average person. At the time Bitcoin was launched, the reward per block was 50 Bitcoin. So right now, Bitcoin is trading at $65,000. So 65,000 times 50 is 3.25 million. And to mine a block takes roughly around about 10 minutes, which is insane. Bitcoin is capped at 21 million, and that's all there will ever be. So it's a finite supply, it's hard money. They can't inflate Bitcoin like they do with our currency. They just inflate, print more money until the currency becomes worthless, essentially. So that's why you see more institutions, more banks, more big, massive companies on the S&P 500 putting money, allocating their funds into Bitcoin because they know it's only going to appreciate over time. Unlike the dollar, the pound, that's just going to keep depreciating and being worth less and less. There is approximately 19.7 million Bitcoin, or 93%, in circulation right now. So back last year, 900 Bitcoin was being mined a day. Then in April 2024, we had the halving occurred, which cut it in half, basically. So it's the halving, things get reduced in half. So now only 450 Bitcoin are being mined a day. In 4 years' time, it'll be 225, then 112. And you get the picture, we're just going to keep cutting in half. So therefore, the supply is cut in half, but the demand and the adoption rate keeps growing and growing every single year. And this cycle will be different as well because we have the ETF. So we have a Bitcoin ETF trading right now, and then soon we're going to have an Ethereum ETF. So it's a huge injection of capital coming into the space, retirement funds, 401ks. It's a lot more legitimate, regulated money coming into the space this cycle, meaning it's only going to pump out bags. So Bitcoin is proof of work. This means that validation is done by a network of miners, and Bitcoin is paid in rewards for miners and transactional fees. So what you need to understand when investing in crypto, after the halving is the bull run. So typically 1 to 2 years after, crazy gains can be made. Your investments are going to be shooting up at all random times. 100%, 200%, 300%, 400%. It is crypto, so there are going to be big retracements, but typically in that time frame is when you're going to make that insane, crazy wealth. So I believe the earliest the bull run is going to finish is end of this year, and the absolute latest could be end of next year. So I'm planning for both scenarios. I'm thinking by this time next year, I would have pretty much sold most of my allocations. But yeah, last year I didn't take any profits, so I'm fully prepared to take profits, cash out, and I'll be informing everyone of my moves on Instagram and YouTube, so just stay tuned. Right now, the likelihood is you could throw a dart and pick any random coin and it's going to go up a few 100% in the bull run. It's just knowing when to cash out and take profit. Also in crypto, things change very quickly, so if I hear bad news about projects I'm invested in, I won't hesitate to cash out, sell, move it into another coin, convert it and so on. So again, stay updated. After the bull run, we go into what's called the bear market, so the next phase of the market. So this is typically when the prices come crashing down 60, 70, 80, 90. This cycle, I'm not too sure how much they're going to come down, but like I said before, this is what makes you rich. The boom and bust cycles, the rinse and repeat, the volatility is what creates the wealth, basically. So typically they come down, they retrace, there's going to be a lot of downwards and sideways action. So you can capitalize, you can still make money in a bear market, you can do some trading, but it's just a great time to accumulate cheap crypto ready for the next cycle. Once we start to see them huge retracements, again, I'm going to be buying aggressively, setting up my portfolio ready for the next cycle. And yeah, it's where the millionaires are created, man. The patient, you might have to sit on it for a couple of years, but again, if we're buying at like a 70% retracement, hopefully that next 4 years, our investments will return us 30, 40, 50x. And again, I've said before, the more money you make, the less risk you have to take, the less you have to wait in the market, you can just cash out straight away. I always like to give you guys examples. So here's another one. Just again, you can't time the market, it's time in the market. So back in April 2017, Bitcoin was worth $1,347. And then in April 21, Bitcoin was worth $57,863. In 4 years, what other asset class in the world can return you gains like that? And again, that's just Bitcoin. That has the largest market cap. So if you was invested in Ethereum or coins even smaller than that, they can pump a lot more because it takes a lot less money to move the needle. So that's a roundup of today's video. I hope it helps. It is a little bit confusing. It's different to the stock market on how the pullbacks and the corrections happen in crypto. But yeah, over time, it's only going to go up and to the right. That's how Bitcoin was designed. But yeah, there are these boom and busts, these huge retracements. And again, you can just capitalize, buy low and sell high. That's the aim of the game. So thanks for watching.